Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys, good morning. Welcome back to another live stream. Good afternoon, wherever you are in the world. Thanks for being here. Yesterday was a crazy day, and it's good to be back in the saddle, if you will, taking a look at markets. I know you just saw that here a second ago, but definitely check out DNA Funded if you have not already. If you are looking to get funded, if that's something that you're interested in, consider checking them out. Really great team behind the scenes. I've worked with them here for a little bit, and they seem very professional. It's for me with the prop firm stuff, like my biggest thing, nobody, truly knows the perfect prop firm, right? But the cool thing is, if you work with a group that has a very professional background and is a a large scale team that seems well funded themselves, that is a good start, right? A lot of the prop firm world is really small, like influencer owned, and I just don't like the idea of working with that, as opposed to DNA Markets is a brokerage and there's DNA Funded, so it's like this big conglomerate company rather than just a small scale little operation that may not properly be funded. So check out DNA Funded if you're interested. You can see what their challenges are using that link that's been dropped in the chat here. It's also in the description. Good morning to everybody. Tana says, yesterday, Nick, you said rarely sell gold. Nick said that he rarely sells gold or NASDAQ, and here I am waiting for a gold signal to go short. Hey, I mean, there's nothing wrong with shorting, gold and indices. I just find that to be a very difficult trade as a swing trader, right? Because typically, you give it a month and most of the time gold is going to slightly go up. Not always, but especially in recent times, right? It feels like gold goes up all the time. It certainly is not all the time that gold goes up. There are periods like this where, gold sells would have just been so much easier. But yeah, something to think about. Good morning, everybody. Thank you for being here. Yesterday, I was terrible about the live stream chat. I just want to say that, I do appreciate you guys watching, and I'm never ignoring the chat. It's just that sometimes when, like yesterday, right at the New York Open, there was just so many trades I needed to put in, and it was really hard to acknowledge kind of everybody in the chat and answer questions. So I apologize for that. Hopefully I can do a little better job of that today. I put out a post on my Twitter and on our Telegram channel today about gold. Basically just, I'm wondering here, let me see if I can pull this up for us. Let me go to my trading journal here. So I made this little post about gold here. I basically said, is this the top for gold or just the beginning? Prices near all-time highs, which could actually signal a larger potential breakout. Could be closer than we think. With geopolitical uncertainty still very real, gold could potentially be the safe haven that investors are looking for in 2025. Stocks have had a very strong run. So has gold, by the way. But stocks have had a really strong run, and many investors are worried about high valuations right now. Perhaps gold offers diversification and stability. Of course, I just want to say this. Nothing is guaranteed, of course, in markets, and nothing is truly 100% safe. There is no such thing as a perfectly safe investment. Can anybody name a perfectly safe investment other than like a ticker? And the answer is no, there's nothing, right? You could say, oh, well, I'll just stay cash and never take a trade, but even cash loses value, right? Or gold, which can have downside moves, or nothing is perfect. The point is, gold could, however, offer a little bit of a free, not a free, but a kind of exit ramp, if you will, for things like the NASDAQ or the S&P, which, I still like myself, but it wouldn't be out of the question to say, look, stocks can get really ugly and can slide really far, really fast. Bitcoin can do the same, right? We know Bitcoin can have 70% drops. So there's all this uncertainty, and people might just say, look, gold doesn't look too bad as an opportunity to spread my money out, right? For people who are portfolio, most people, most rational people, unlike us who are not, you know, staring at the markets all day long, they just say, hey, how can I spread out my money and take bets on multiple things rather than just one thing, right? So a lot of people buy gold for that purpose. I think there's an attractiveness to gold in a year like this. Regardless of your politics on Trump, he clearly comes with some strong opinions, and he's quick to act and make big decisions. And I think that Trump does offer or bring some volatility to the market. That being said, it doesn't really hold water when you look at his last presidency. During his last presidency, look, the market is a great scorecard. We can go look at stuff. And during Trump's last presidency, if we just remove COVID from both Biden and Trump, because it was such a freak kind of external thing, volatility under Trump was pretty low for a good chunk of it. There's always going to be spikes in volatility at some point, like we had this spike during the trade war stuff. But for a large chunk of the Trump presidency, you had these very low average VIX readings. So, I think right now we're having this, and this is actually very seasonal about presidencies. Usually, regardless of who the president is, the first 6 months of any presidency, most of the time, the market returns are very choppy. You can look at the seasonality of what I'm saying, and you'll see what I'm talking about. Typically, the first year, there's like choppy market returns and uncertainty. And then, towards the end of a presidential cycle, typically returns are better. And that would make sense if you think about it. Any new changes being introduced are going to make the market wobbly at first. Doesn't matter if they're Republican or Democrat. It just is a wobbly kind of kickoff. And then it just makes logical sense that towards the end of a presidency, at the maturity of some of the ideas and things, that markets kind of find their footing and rally. And that's kind of exactly what we saw with Biden, right? During 2022, you had this massive crash in tech stocks. And then things really found their footing and rallied towards the end. So maybe we're on the same sort of cycle. We had a pop in the VIX here up to 22 yesterday, which yesterday was a strange day, guys. Really strange day. Why do I say that? Well, look at the NASDAQ. The NASDAQ dropped hard yesterday. Look at the Dow. The Dow had an excellent day yesterday. Really curious, right? So you think about that vocabulary word of the day, bifurcation in the market, right? You have this divergence. One area of the market doing well, value stocks, consumer staples. Companies like Walmart yesterday did really well. Companies like, for example, Hershey's, HSY, a very boring company, had an up day yesterday. AT&T had an up day yesterday, right? So you had this very, look at, holy crap, AT&T must have had rockstar earnings or something, but AT&T was up, right? So you had this very weird day yesterday. Why do I say weird? Well, because you had at the same time, NVIDIA, a stock that I own, sadly, right now, dropped massively, right? So you had this ginormous drop. I had some gains in this stock that completely got wiped out yesterday with the stock dropping 16, 17%. So, you're getting a little bit of a bounce here today, but regardless, the point is yesterday there were some seriously strong winners and some seriously big losers on, the stock market side of things. The NASDAQ dropped at 1.5%. It bounced back from those lows. And in my personal opinion, I do think that indices will continue north from here. I could be wrong about that, and I have a stop loss on my S&P 500 trade. But I think that the DeepSeek stuff, and I've said this openly on the channel, and I could sound like an idiot in a week, or I could sound like a hero, but this is my opinion. I think that the DeepSeek stuff, there was a reaction yesterday, in my opinion, that the market sold first and is going to ask questions later. So essentially, I think a lot of people said, oh my gosh, what is this DeepSeek thing? We don't know enough about this. We don't know how, is this going to be the new forefront of AI? And does that challenge tech, valuations and all this? And And I think the market just sold out of like, okay, there's too many unknowns. Let's just get out of the way and come back later. And I think that might be what happens. I think we might see some selling in the short run. But I don't think that this is the end of the AI tech trade for the US markets. And if I'm wrong, again, I'll stop out on stuff, but um, I see markets going to new highs, and I'll say that now and look like a fool if I'm wrong, but who cares? You know, at the end of the day, I've done this for a long time. I've been very, very public about my ideas, both right and wrong, and I'll continue to do that and take the heat when I'm wrong. It's part of the high I get of running this YouTube channel, right? There's times where I'm right, there's times where I'm wrong, and I'm going to be right. I'm going to be wrong sometimes. But I think personally that yesterday's reaction was a little overdone, and I bought the dip on some stuff. So that's my opinion. I also bought the dip on oil. I may have been a little early on this idea, but I went long oil price right around just north of $75 per barrel, US oil, that is. And I've got a stop loss below the 61.8% retracement and the 73 key area level of support. So looking to see if that can hold. You know, part of the reason I like oil, somebody asked a question, Nick, why would you be buying oil if Trump is going to, you know, kind of get oil and gas companies to drill a ton of it? Wouldn't that be a silly idea? Well, I mean, the thing is, markets are just never that easy. It's never as easy as, oh, Trump said this, now the market's just going to do this. That kind of theory has been in the markets for months, right? People have been kind of debating the drill baby drill stuff for months ahead of this time, right? Even before we knew Trump was going to be the president, there was, oh, well, if Trump is the president, oil prices could go lower. So that's been thought about for a long time now. This is why markets are difficult. There's a lot of smart people making decisions in markets, bidding prices up and down. So when I looked at oil the other day, I said, okay, we had this really strong push higher. We still have geopolitical uncertainty all over the place. You know, the Russia-Ukraine thing, there was the idea of in 24 hours, we're going to have that done and dusted, right? You know, that would have been nice. I would have been I'm excited to hear that, and I hope that does end from a humanitarian standpoint. But I still think it's a risk. We don't know that that's just going to be an easy negotiation, and so, you know, I bought the dip on oil with a stop loss below structure. Part of the reason I did that was not supply side based; it was actually demand side based. What I mean by that is when you're looking at oil, you always have supply and demand to consider. Supply side and demand side are two separate kind of things we have to tackle here. So, for example, when you look at demand side, I would say the story for oil looks very good. So, if we talk about demand side, right, the U.S. economy is growing very strongly. PMI numbers were upbeat. Retail sales would work against us, but inflation statistics staying relatively cool could mean the global kind of risk on theme could continue. Jobs numbers in the US were strong. Unemployment rate actually ticked lower. Unemployment claims not too threatening. What I'm getting at here is that most of our economic reads are pretty strong for the US at this time. JOLTS job openings better than expected. So most of this stuff would tell me, look, the demand for oil should remain pretty intact. So when we look at that, we say, okay, the demand side looks pretty good. Supply side is a big old unknown question mark, right? The supply side of like, will OPEC do what Trump wants? And will Putin do what Trump wants? That's a bunch of question marks. And that's a really hard basis for me to trade around. So what I do instead is I focus a little bit more on the demand side. It's something that I can quantify and systematically use my edge finder to kind of focus on, right? So I can look at this stuff and say, look, economy, generally speaking, this is looking more blue than red. That would signal a little bit more orientation towards risk on. And in a risk on environment, I like the idea of having some energy exposure. You know, a lot of energy companies got crushed yesterday too off of well, specifically like power companies got really crushed off of the idea that the AI trade is under threat and all that. But I do like the dip here. Like I said, I went long here with a stop loss. If I'm wrong about this idea, it's one trade. It's not a big deal. One trade is, I take many small losses in my trading in the efforts of trying to find the right, good move. So we'll see if this one is it. It might not be, it might be. So I'm going to kind of just manage risk on this trade, but that is a position that I have live. If you guys would like to get access to the report that I'm looking at, the Edge Finder is currently on super sale. We just dropped a massive discount on this product. If you're not using the Edge Finder right now, here's a chance to get access to it for 35% off for a very limited time. If you'd like to get access to the Edge Finder, we'll drop a link here in the chat and in the description. If that's easier for you, if you're watching this recording back at a later point, click this link and you'll be connected to a real person on our support team. Let me show you what happens when you click that link. So all you have to do, click that link, click chat now, click Edge Finder 35% off sale event. That is going to be available for a very limited period of time. But if you're interested in getting a copy for a very low price, that is going to be a great opportunity to do so. And that is ending very soon. So don't miss the chance to pick up a copy of the Edge Finder, very low cost. And if you just want to lock in that price, just send us a direct message using that link right now. And someone from our support team will get you all the information you need to lock in that price before the sale ends. So there you go. And like I said, don't miss that if you've been thinking about it. It's a great chance to get your tool for super low prices. S&P out of the gate, a little bit lower here. I'm back to break even on this trade. NASDAQ a little bit lower, down 0.43%. I'm going to be checking out NVIDIA here today. NVIDIA had some gains. Now look at that, back to flat here on the day just about. Tesla down 1.7, Broadcom down 1% here this morning. Google's flat. Let's see, Microsoft slightly lower after the bounce back yesterday. Let's actually filter this, see if we got any interesting moves. There's SoFi and PayPal down, 2+%. Intel's down 1.5. And then we got some winners on the day. Look at Meta. Meta actually ripping on this data recently. Apple as well, CRM. A lot of these companies actually love the increased competition in large language models, as these are input costs to their businesses, right? Think about Meta. More competition in large language models is a good thing for Meta, who is using AI. They're leveraging AI to make profits in their business, right? So more competition for large language models, which could drop prices for Meta, is an excellent thing. So they're actually reaping the rewards, up another 2% today. This stock is ripping it. Same thing with Apple. Again, input costs were being reduced for these companies, basically adds money to their bottom line. So if that is the theory, right, we don't know that to be 100%, but if that's the theory here, you can kind of understand why these stocks would be actually rallying off of some of these concerns. Palo Alto, I have a trade on this one as well. So this is going nicely. So we like to see that. And look at that, NVIDIA officially down in the red here once more today. Not by a lot, about break even on the day, but we'll see where that stuff ends up. NASDAQ down about 0.4, at least at the time of us streaming here. Gold's up 0.5% on the day. Silver's back to flat on the day. Bitcoin's up 0.5%. I'm still in my Bitcoin trade. Going to keep watching that, but I believe Bitcoin does still have a top setup bullish reading. Did it fall off? Where's Bitcoin? Am I missing something? Where's Bitcoin on the Bitcoin? Where'd you go? I think Bitcoin just peaced out for the day. Oh, it must be updating right now. Bitcoin will come back to us soon on the Edge Finder, but it was yesterday. It was getting a strong, bullish. I think it was a +7 yesterday for Bitcoin. So, we have Bitcoin readings bullish. We're getting S&P bullish readings, oil bullish readings, Dow and NASDAQ. So, like I said, I'm going to look at this dip as innocent until proven guilty. And I've got several things that I'm interested in potentially getting long. So if I take a look at, let's just go through the indices. Like I said, I am long already on the S&P 500. NASDAQ, if it doubles down here, comes back and tests this area, this 20,800 level, I may actually be interested in getting long there. The Dow Jones, really strong chart here. Love this. If you take a look at the way the Dow is moving here on the daily chart, look at this, yesterday's intraday kind of reversal, spike down, and value stocks took the lead yesterday. Really strong day for the Dow Jones. And now testing just about, guys, we're we're less than 1% away from an all-time trading high for the Dow Jones. Really impressive. Here's the thing. Got a huge level of resistance. If we can break through 45,000, the Dow Jones may have a really good start to the year here going. I mean, this is a great reversal here from this kind of downward trend that we've been seeing. A lot of green on this chart. Definitely looks really strong. Dow's doing good. Yeah, Dow's really killing it. Does Trump have the power to fire Powell? I believe the answer is no to that. I believe it's Congress that has to remove Powell from his position. But in my opinion, I think that Powell should stay. I think he's done a pretty good job. All things considered, given a very difficult task of cleaning up a pandemic and all the monetary infusion, the money printing that's gone on, we still have many problems with debt in the United States. But considering we didn't enter into some horrible high unemployment recession in the last few years, I'd say the Fed's doing the best it can with what it's got. Again, I don't think I could do any better in that role. That is a very hard job. And no matter what you say as Powell, people hate you. That's the hard part. Well, with any politician, right? No matter what Trump says, Powell says, Kamala Harris, like any position like that, there's going to be staunch resistance to whatever you say and do. It's just why politics is so ugly. People have such strong opinions on everything. Oil trade was looking a little bit better, come down here a little bit. If we stop out on this one, it is what it is. Bitcoin, I will stop out, trail out actually. I mean, I'm in a profitable position on Bitcoin. I would love to see this thing take back the highs and just keep going. But if it doesn't, my risk management is close out below that spike that we saw yesterday to the downside. If we break that low, that is my signal to clear out of the Bitcoin trade and take profits. Are you bullish on the DAX after some correction? I mean, I like most indices, but DAX is getting a neutral reading for me on the Edge Finder, so probably not like one that I'm going to seek aggressively. I would much rather look at U.S. indices at this time. NASDAQ, Dow, S&P on pullbacks is something I'm more preferable to. I'm really liking the NASDAQ specifically. It's under pressure, and it's kind of a scary trade because like you have so much bad news out there for tech stocks. But I still very much like that area of the market, and I'd be interested in potentially picking up a long position on the NAS if I can get one. So I'm going to watch NAS pretty close here today, see what's happening with all that. I'm going to keep coming back to NVIDIA. NVIDIA actually down now 1% on the day. So we were up about 2 when we started the stream, now down 1. You can see the volatility on this name just incredibly high right now. Take a look at the 5-minute chart on NVIDIA. You can see there's this 9:30 open. Second that morning bell got rung, you can see NVIDIA to the downside trading at 117 now. Kind of a crazy, just a crazy stock. Even if you're not a stock trader, this has just been one to watch. Traded at a high of 153.2 or so. That's about at peak here, about a 24% peak to trough drawdown so far, which is crazy, really crazy. I think I've followed you for years now and currently bought a VIP subscription for your trades that involve stop loss. What is the percentage that you use to feel you use because you feel comfortable with it? That's a great question, Florin. So risk management is something that I've always kind of reiterated over and over that it's a personal choice. It depends what you want from your trading. If you are somebody who is okay with taking more risk and potentially blowing your account, something over 1% could be something you look into, right? In markets, there's no free lunch. So if you want to make more money, you're going to have to increase the chance that you lose all of your money. That's the part nobody wants to hear. But for me personally, I usually risk 1% or less on a position, but I have a variation of risk that I do per trade, depending on what's in my account. So I don't have a uniform, every trade I use a 1% risk. That's not something I do because I have a portfolio of stuff going on. I have options trades, stock trades, I have index positions, commodities, currencies. So I have so many things going on at once that I actually base my sizing based on how much of my available cash I have in my stock brokerage. as well as how strong the signal on the edge finder is giving me. So if I get something stronger, like I have a pretty good sized S&P long position right now, it's getting a +9 on the edge finder. That's a really strong reading. So I have a slightly higher risk on that trade. So I have a what is called a dynamic risk model that I personally use, and I think it's pretty personal. Like your choice of how much you risk per trade is there's not a right or wrong answer as long as you're not risking like a stupid amount per trade. I think it's pretty personal because, like, again, you might be somebody who's less risk willing, like myself. Like I don't like to have huge risk on my account because I'm working with a large capital basis. I don't need to risk a ton to make a decent amount of money. So I personally choose to risk much smaller, but it's very personal. But again, what you need to understand is if you're somebody who's like, oh, I risk like 2-3% per trade, you're operating at a very high, what is called risk of ruin. What that means is things can be very good for a long time, but the risk of ruin is the possibility that if you enter into a steep drawdown period, you could actually see your account blow completely. And there is always that risk, no matter what strategy or how much risk, you always have a risk of ruin in markets, but it exponentially increases based on how much you risk per trade or, how much leverage you use on your account. So something very, very personal and something you really need to think about is what is your risk tolerance and are you aware of what is your risk of ruin, right? If you're risking 3% per trade, you may not recognize that your risk of ruin is very high. With a 3% risk per trade, your risk of ruin is very, very high. And again, not popular to say that because how are you going to make big gains if you don't risk big? But again, I focus more on drawdown management than I do on how much I can make in the markets. And by focusing on my drawdown first, that's what's kept me in the game for all these years and helped me to actually ultimately make money in the markets, was focusing on not losing it. Hopefully that makes sense. But that is truly my take on it. It's really, really an important distinction to make, your risk tolerance and what you're comfortable with and what you're not comfortable with as well. Okay, guys, so let me just double check that we have what the schedule's looking like today. I believe we have, James is coming on here for a little bit of time, take over the show. We got Forex James taking over the stream in just a moment. Before I head out, just a reminder, guys, the Edge Finder is currently on super sale. We're doing a massive New Year's discount. You can currently get 35% off the Edge Finder for a very limited time. If that is something that you're interested in doing, we'll drop a link here in the chat right now to where you can speak directly to a member of my staff. Ask them about that 35% off discount. It is 30%, but for those watching the stream right now, we'll offer an additional 5% off if you DM us right now. Again, real people are on the line who can help you get access to your software and start using the tools that I use to help find the trades that I take. So the top setups algorithm, our COT data, seasonality, our economic heat maps that we just launched that are really big fan favorites. So take advantage. Don't miss that opportunity. Get your discounted Edge Finder here today using the link being dropped in the chat. We're going to take a quick break to thank our sponsors, and we'll be back right after this with Forex James. Stay tuned.
2025 is here, and to kick off your new year of trading, you can get access to our free A1 Trading Telegram channel. Inside, we share Edge Finder data, free trading courses, market forecasts written by our in-house traders, and free trade ideas on Forex, indices, gold, and more. And if you're more into the stock trading world, we have a whole Telegram channel dedicated to just that. Start your new year off right by joining the A1 Trading Telegram channels completely free. Links can be found in the description and in the live chat. Now, back to the show.
Hello. How is everyone doing? Hope you're all good. Okay, cool. Someone says, what if you've got $25 in your account? So I guess we're continuing off what Nick was saying about risk. To be honest, if you've got $25 in your account, it's not really worth trading. I know that's probably not what you want to hear, but sadly it's true. There's not much you can do. You'd need to have at least 1 to 200, 1 to 500 leverage in order to trade 0.01 lot size on 2, 3, 4 trades. And even those 0.01s are likely going to exceed a normal 1 to 2% risk per trade. Alan, Marcus, Royal, hello guys. Cube, I can talk about the rate cuts, sure. color theme today, bro. Yeah, I changed my charts around a little bit. I get bored when I'm waiting for trades to develop, waiting for things to happen. I just play around with the colors. Sometimes I'll find one I like. TradingView actually changed their default dark theme. It used to be like a dark blue, now it's a dark gray. So I thought that was a good opportunity to have a little bit of a refresh. So regarding rate cuts, I don't think there's actually going to be a rate cut. So if we have a look at here, if we look at the FedWatch tool, it's priced in. It's very, almost certain. There's obviously a 0.5% chance it won't, but there is that extremely high likelihood we're going to get the hold. The narrative I expect from Powell will be along the lines of he's not going to listen to Trump. He's not influenced by Trump. He doesn't really care what Trump says, because to be honest, that is what he should be saying, because Trump's not really a economist. So I would expect Powell to say that. I would also expect Powell to stay on his cautious approach. So to me, I would expect that to be more of a neutral to hawkish tone. And going forwards, it's very likely he will just stay on the data-dependent track. So I honestly think that the US dollar will be pretty bullish. Obviously, we'll have to wait until we know what Powell does say, but that's just my expectation. You think AUD USD is going down to create an inverse head and shoulders? I don't know. I think patterns are a little bit subjective, to be quite honest. I'm sure if you go back far enough and collect enough data, you'll see that, around 50% of the time they work, 50% of the time they don't. I'm not even really sure how to draw a head and shoulders. So on the daily and 4-hour chart on AUD USD, I don't really see. Oh, I see, actually. So I guess you'd mean this is the shoulder, this is the head, and then possibly another shoulder. Maybe, but to be honest, I would be more looking for a continuation of this downtrend and look for a lower high. I think the US dollar strength is going to continue. We heard a little bit more about the tariffs last night from Trump. Basically just reinforced the idea, which the US dollar liked. We've also, again, got the... we've got Powell coming out tomorrow, so I would expect the US dollar to be pretty stable. You still praying for euro shorts? I'm not praying because they're currently working out just fine. But yes, I am still short euro. Surge, yes, I'm still in euro positions. So currently in pound dollar shorts, I'm in a New Zealand US dollar long. I took this one yesterday. I explained it on stream. I've also got a video about it. But essentially, this is a copy and paste of an HSBC trade. HSBC is a large bank institution. So copied their long position to basically offset some of my dollar long risk. So yeah, I'm short euro dollar. This one's completely fine. I'm still short on euro pound as well. This one's back to average price pretty much. So I'm basically break even on this trade now. But yeah, the mean reversion was pretty perfect actually. So again, I've been talking about this for a while because I was stuck in this trade for I'd say the past 2 weeks, maybe a bit longer. So I've been shorting this whole move to the upside. Rejection of the previous Bollinger Band or the upper limit. I mean, yeah, it sounds ridiculous, but if you look at the way that this market works, especially on the weekly, it's pretty common for the market to bounce off these extreme levels. So yeah, back to break even on this trade. So just looking for a little bit of profit, then I'll close out of that one. Powell is going to throw out the good or reliable. We are data dependent, committing to our dual mandate. Yeah, we'll see. Again, can't really predict it. I mean, you can look at the data and you can come to a conclusion, but unfortunately, we can't read his mind. But yeah, I think we're pretty fine, really. I don't see much of a reason for Powell to be dovish. Not going to short euro at this moment because USD ain't that strong at the moment. Trump will send the USD down. Why? What will Trump do to send the US dollar down is what I want to know. Gold, ball out. I half agree and I half disagree. I think the DeepSeek thing led to a very brief risk-off move, obviously leading the VIX to spike. I view that as a catalyst for some repositioning in the market. I don't think the DeepSeek is what affected the whole market, but I think it was a pretty strong catalyst. But yeah, that's just my view. So yeah, let's have a look at gold. Seems pretty strong, actually. We seem to be holding above this resistance level, which is quite a good sign. I wouldn't really class this as a retest, although it's pretty close, so maybe you could. It depends how strict you are. Came up to previous highs almost. Yeah, didn't quite get there, but almost did. So yeah, to be honest, I think the easiest path for gold right now is to the upside. Created very clear trend, upside trend. So profit target for me would be 2,800. Unfortunately, the risk to reward on this one isn't great unless you want to be a bit more aggressive. But yeah, I think gold upside is fine. Really, just follow the trend. In terms of macros, I don't have anything for gold, to be honest. There's not much that really concerns me in terms of upside potential, but I also don't have much that makes me want to go in for long-term buy positions. 2025 USD down year. Yeah, I mean, I don't expect the US dollar to continue all year, but I do think it has some more upside left in it. Any books you recommend? No, books won't make you profitable. Taking action makes you profitable. So go on to websites where you can sort of understand like interactive learning type things. So you could do something like Udemy. They're quite good. There's also the other one, I can't remember the name. But yeah, to be honest, sitting down and reading 200, 500 pages of a book isn't really going to do much for you. That's my opinion. I've never really read any trading books. Hi, James. I wonder if DeepSeek may affect earnings of Mag 7. Lee, I would assume it would. But again, as I always say, I don't trade stocks. I'm really not involved in that world. So don't take that for gospel. But yeah, I think what we've seen was actually very concerning, really, because I mean, I'm sure all of you already know this, but DeepSeek was made for, I think it was 6 million, using outdated chips, and obviously done in China. Whereas ChatGPT and the other AI systems that are built in the West have obviously got the newest and the best hardware and chips and software built for hundreds of millions with billions in funding and budgets. So for China to do it cheaper with more limited conditions, to me, is a big warning sign for the US, to be honest, in terms of their AI leadership. Because at the WEF forums, Trump was saying he wanted the US to be the AI capital. So they're not really on track to meet that target at the moment. Based off daily fibs, I think next leg down is when EU gets to parity. Possibly. I think EU is kind of limited at the moment. I wouldn't say we're not going to parity, but I think it needs a kick. It needs some boost to get there. It needs something to happen. And I think that would be the ECB cuts is great. We've got the Federal Reserve maybe sounded a bit more hawkish, which would be good. But I think the cherry on top would be Trump solidifying tariffs on Europe. That would be a really, really good one. Oh, we've got Hold on, let me just pull up Forex Factory. Sorry, guys, completely forgot we've got news. I was busy yapping away. Where are we at? Consumer confidence came to the downside. Actually, that's not great for the dollar. Came out at 104.1. Forecast was 105.7. Previous 104.7. So yeah, undershot previous, undershot the forecast. I mean, it's not detrimental. I wouldn't say it's an awful release, but definitely not ideal. So yeah, I mean, actually, barely any sort of reaction here, which, to be honest, isn't really a surprise. You want pound yen? Yeah, we can have a look at pound yen. I'm not too bothered about yen pairs. I'm still sat on the fence. So obviously we had the rate hike by the Bank of Japan. That was very underwhelming. Didn't lead to anything really. The sentiment on the yen still seems very, very weak. I mean, look at this. So yesterday, when obviously the markets opened and we saw the large moves, obviously that's when we saw the yen spike to the upside and followed by sort of downside moves today. So to be honest, I'm not really finding anything that works for the yen in terms of any optimism other than the potential of an intervention at 160 on dollar yen. So it doesn't make me want to buy. I'm just thinking of the pound. The pound, to be honest, isn't in a great spot either. It's definitely stronger than the yen in my book, but it's not something I am overly interested in having some exposure to. So yeah, to be honest, long side does make more sense in my view. Maybe something relatively small, just back to the previous high. So something along these lines. Look for a correction of Monday's move. Was this Monday? Oh, sorry, that wasn't Monday. This is a 4-hour chart. This was back in early January. But yeah, other than that, there's not much for me to talk about. Please analyze UJ. So I shall just, let's have a quick look. So this is a UK economic heat map. This. Is it this? I just need to make sure I've got this right. Oh, here we go. UK economic heat map. Oh, interesting. Okay, cool. I've not seen this before, actually. So GDP growth, actual forecasted change. So negative GDP growth. PMIs is good. Retail sales is poor. Inflation, lower inflation is better, really, because we need some rate cuts in the UK. Unemployment, it's not surprising, the UK is awful. Interest rates are at 0.25. So, yeah, all right, interesting. I'll have to come back to that in a minute. So yeah, someone wanted dollar yen. So dollar yen, I would suggest, has more upside potential. At the moment, though, it's kind of trapped within, you know, if you want to call it a range, fine, I'd call it a range as well, but it's trapped within very small price movements. It's not doing much. However, I am still on the bullish side of the dollar, and I, again, not really hopeful for the yen at the moment. So I'd be quite happy to trade up into 160. And then I would be getting out of the position as quickly as possible. So the reason is because we've obviously got the danger zone at 160. What I mean by danger zone, this is where it's projected the Ministry of Finance is going to intervene, and that's when they pump money into the yen and slow down depreciation. However, knowing or having been through the interventions before, they're never exactly on target. So, for example, if people are saying 160, it's likely not actually 160. It could be 161 or 162, 163. But that's sort of the general level. So in my book, 160 to 165 is where it's no buys and maybe going for a little gamble short side and see if we could catch something. But yeah, I think beyond 160, you're playing with fire, really. Trading is reactive, so I see no sense in macro as a retail trader. Pointless, honestly. Reb, why do you think euro dollar moved to the downside? Why do you think I was able to catch the whole downside move on euro dollar since September? Because I paid attention to macros. If anything, I think your point applies more to technical trading, because if you're looking at, the previous 5 candles, that's all history is done. It doesn't really mean too much without context. Lee, are you talking to me? Because I'll be honest, I'm not sure what you're talking about. Can we check US dollar versus Canadian dollar? Yeah. So with the dollar CAD, I'm not really too comfortable taking that position. I've been saying it for a while, but I just wasn't sure about oil. Now, I think oil is actually a bullish thing at the moment. Now, obviously, the trend isn't reflecting that, but the thing is with oil, what's having a huge impact is Trump. Now, Trump hasn't actually done anything. He's got the drill baby drill narrative, and he's got he wants OPEC to reduce prices, but that's both wants. That's not is doing, and hasn't actually done anything yet. So it doesn't really mean much to me until we do see some action from Trump. So to me, oil is still bullish. Until then, maybe we'll see Trump do something, and then I'll start looking to go short on oil. But again, we'll have to see about that. So that leads me to being very neutral on dollar CAD, because if I'm more bullish on oil, that means I'm bullish on the Canadian dollar, which means if I want to go long dollar CAD, it doesn't really make much sense, because obviously if we're expecting strong oil, we need strong Canadian dollar. If we want to be long in this market, we also need strong US dollar. So that is why we have such a horrible range in this market, because we've got the dollar and the Canadian dollar fighting for dominance at the moment here. So yeah, there's no trading opportunity until we've got some more clarity on oil. Then yeah, there's nothing here, in my opinion. Uh, 300 pips in 3 positions altogether. All of macros. Son of Gorilla, that's amazing. Good job. It's by far the worst currency of mankind. Yeah. I've just seen my Telegram links being dropped. By the way, guys, if I share a lot of market updates, analysis, and ideas and things in that Telegram. It's 100% free, so feel free to join that. Consumer data are not good for USD. Can you look at it? We've already looked at the US dollar data, but it doesn't really do much. It's not something I'm overly concerned about. We did have a slight drop. So 104.1, down from 105.7 as the forecast, and then the previous was 104.7. So, the actual release wasn't too bad. I mean, it's not obviously not positive, but it's not the worst thing ever. And since we've had the release, the dollar's basically not done anything. So very, very flat, really. The FTSE, yeah, the FTSE's horrible. Bro, to be honest, I always buy US 30 together with the S&P, but that's not a new thing. So if you place one long position on US 30, you always place the long position on the S&P as well. Fair enough. So you bought gold. Okay, let's have a look at gold again. Yeah, again, I think gold's pretty set to continue to the upside. How far? I honestly don't know. But I would suggest it's easier for gold to continue up than it is to start crawling down. But obviously, that's a very rough trade. That's a very rough idea to start trading off of. But Yeah, there's nothing that really piques my interest here. Lee, no, I hate the FTSE. We can have a look at the Russell in a second, Matteo. Yeah, the FTSE's just horrible. I don't really know much about it, to be honest, which is probably quite bad since I live here. But as far as I'm aware, it's made up largely of defensive stocks, which, you know, doesn't give it much capability to really do anything. But, you know, if we take the FTSE on, let's put it on the daily, and let's do, I like to show this chart. I think I've shown it a few times on the stream, but it's a good little comparison. Let's take the S&P and we can compare it. Oops, not that one. Here we can compare. So we can see how drastically the S&P 500 outperforms the FTSE. So if you were, unless you're a very good range trader, the FTSE is just a bad option. So for investors and for swing traders, position traders, generally the S&P just makes so much more sense, because in theory, you can just buy, and eventually you'll be in profit. Whereas the FTSE, you could have bought back here in 2020, and then in 2021, a year later, you'd be back to break even. Whereas in the FTSE, that'd be a pretty hefty profit. So that's mainly why I just don't touch the FTSE. I don't really even pay attention to it, because it's actually pretty useless. Okay, so we can have a look at the Russell. Yeah, I wouldn't expect it to really be doing too much at the moment, especially now the rate cutting cycle is kind of over. As I said, I don't really do anything with stocks, so I don't really know anything about the Russell other than that it reacts very well off rate decisions. But knowing, again, that we are sort of slowing down the rate cuts, I would assume that takes away a lot of the bullish sentiment that was here a while ago. In terms of positions, I don't see anything here. I tend to stay away from these range bound movements when the market's just moving sideways. There's no defined trend. There's not really anything going on here for me to be interested in. MySL has been hit in profit after gold pulled back yesterday. Wouldn't really look at gold unless I see some mass panic. Yeah, Royal, I'm very similar. I'll trade gold again if there's very strong economics that point to the upside on gold. I'm quite happy to go in for buys. If I'm looking to short, then yeah, I'll need something pretty severe. I don't think I've taken a short position on gold in probably a year and a half, 2 years. Gold always bullish / neutral until proven otherwise, in my experience. Yes, that's exactly what I was saying yesterday. With things like the S&P and gold, generally I will default to going long because that's just the natural flow of the market. For me to go short, there needs to be some sort of, there needs to be something very strong to make me do that. There's beautiful scenery here in the UK. Check out NC500. If you come over here, it's north of Scotland. Yeah, that's the thing with the UK. It does have really, really nice areas. But as soon as you start getting into the cities, it's like you just stepped into hell. Okay. Market pulse. Yeah, I'm good. Thanks. How are you? You guys are all looking at gold. Market pulse, we've just been looking and talking about gold. So I won't go over it too much again. Feel free to rewind. But to me, I think long gold makes more sense than short. But as someone just said, I can't remember who said that, but yeah, it's not really on the Edge Finder. Oh, it was you that said it. Yeah, it's not on the Edge Finder, so that automatically kind of writes it off for me being interested. Nasdaq's bullish, Dow, oil, S&P, dollar CAD, platinum, copper, dollar ZAR. to be honest, actually, the FTSE might not be bad to go short at some point, depending on what the Bank of England's going to do once we get some more signals. I think short FTSE might be quite a nice play. Okay, let me just check the times today. 10:15. Okay, cool. So, guys, I think I'm coming to the end of my segment. I think Chris is coming to take over pretty soon. So if there's any questions, let me know. If not, that's completely fine as well. Matteo, we just did the Russell. I read your message. We looked at the Russell. Can you check silver? Yeah, we can have a look at silver. I really need to get a haircut. It's really frustrating. It keeps going in my eye. Silver. Okay. I don't think I have anything on silver in terms of interest. I quite like where it is from a technical view. We've got a really nice level throughout here. Previous supports turned resistance, kind of support here, support. It seems like we are rejecting it at the moment. So I wouldn't mind potentially going in long just on a price action view here. Stop loss below there, take profit at the previous high, 32.1. I think that seems quite sensible. Let me just see here. Commodities, silver, bottom line, neutral to slightly bullish outlook with Fed policy and industrial demand key to silver's performance. Downside risks include higher real rates, lower industrial demand and US dollar strength. Potential upside catalysts include Fed rate cuts, stronger gold prices, increased demand from the solar/EV industries. Okay, to be honest, I wouldn't expect silver to have much potential. But yeah, I think that makes more sense. Okay, guys, Chris is here. Marcus, if you're stuck in a position and it's weighing you down, just get out. To be honest, don't waste your margin, guys. Chris is here to take over the show. Don't leave when I leave. Chris will take care of you. Have a good day, guys. I'll see you all tomorrow. Thank you for having me as always. Have a great day. Don't get margin called.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. How are we doing today? Happy Tuesday. Welcome back to the post Deep Seek day. We'll see what happens. I want to take a look at some earnings today. So it's Tuesday morning. We had Boeing, General Motors, Lockheed Martin, Royal Caribbean, RTX, JetBlue, Synchrony, Cisco, Kimberly-Clark. We can take a look and just see if there's any crazy reaction. RCL, Royal Caribbean, has been a beast, and it is again. This is a move that I would almost consider fading, which I don't want to sound stupid by saying I'm calling the top here, but we have a pretty ridiculous run that I don't know how much higher we go necessarily. But that'd better be a dumb trade, to be honest. So I like Royal Caribbean, but I want to see a pullback. So I don't know if this, tops out, fades out. We'll find out. But let's just take a look. So Boeing, BA, earnings popped on Boeing. So it's up to 186. General Motors, gapped lower. Lockheed Martin, that's LMT, pushed lower. Let's see here. I've got a 111 trade for March down to 219. Okay. I'll keep an eye on that one. Let me see, 425. I got to set a chart alarm at 425. There shouldn't be that much volatility on this trade. But I'll see if that's a gap fill on Lockheed Martin. Earnings-wise, they missed on revenue by 1.29%, beat on EPS. Stock price down, but pretty well supported. I mean, it's down below the 200, which I don't love. But if we have some trend line support here, maybe bouncing, trying to get a gap fill. If we have like broader risk appetite, that would hopefully be a gap fill. I'll keep an eye on that one. RTX, that is RTX Corp. And busted up the new highs and then fading pretty hard with a red candle. We got JetBlue down to 618. Son of a gun. These guys can't get their crap together. Good Lord. You got freaking UAL just killing it to the upside. You got Delta to the upside. You got LUV with earnings this week. Southwest has earnings on the 30th. Freaking JetBlue. Crazy. Anyway, I mean, it's pretty well supported right around this like $5 handle. They just can't break higher. Here is the weekly chart. I mean, we consolidated back in like 08, 09. It's like you'd think a stock that you could buy for the same price at 08 would be good, but it's also, why does it suck so bad that it's not any higher than it was in 2008? So I do have some shares of JetBlue, so that's why I can say that. I can hate on JetBlue stock. So my break even's like $7. But I was looking to see if we had a range trade in here where we can go up and actually benefit like the other airlines are doing, to making some fresh highs where maybe this gets into the teens and I take some profit. But anyway, that's JetBlue. Cisco this morning, that's food related. Wait, this is Cisco for computers, right? No, that's food. I was going to say Cisco food, and then there's CISCO for computers. $72. That one's pretty choppy. I don't know what the IV is on this one, but I would like maybe a strangle on that one would be okay if you want to allocate some extra capital to it. But you're probably going to get terrible premium for it. What else? Kimberly-Clark. Is it KMC? Nope. Kimberly-Clark, KMB. This is a lot of this is kind of like a Johnson & Johnson, Procter & Gamble type stock, trading at 132. Okay. More importantly is we got some earnings after market today. I would say the two I'm watching the closest would be Starbucks, which is trading around 99.55 with some good support around 73. I'll watch this one. I don't really have a trade on Starbucks right now. And then Chubb, I have some exposure on with a 111. It is, what's the ticker? CB. So we're at 274. We bounced nicely off the 50 moving average on Chubb. And I'm looking at this as a 1-1-1 trade. I collected $2 income. I am willing to own some of this down towards if I own it, it's going to be 208. We got a nice support level at 223. So doubtful that I would really take any ownership on this play. So let's see what happens with earnings. Hopefully, if it's Q4 related, then it's going to be pretty solid. We go into tomorrow. We have Progressive Insurance, which should be PG. Nope. What's Progressive? PGR. Trading at 244. If earnings are positive, then my little ratio spread should be fine. Let me go back to the daily time frame as well. Right there at that 200 moving average. So if it holds here and pushes higher on positive earnings, that'd be nice. If it pushes lower, I would be willing to own. One thing with insurance companies is they do a pretty good job filling gaps. So if we gap lower, we tend to fill that gap. But if we have positive earnings, this pops up and this ratio spread is likely going to be full profit. So that's tomorrow morning. I want to take a look at Tesla. Let's get into the big swingers here. So Tesla trading at 393. Likely going to have some powerful earnings. Let me see what the market makers say for Tesla. So TSLA. So the IV at 65.7, which is pretty high. We have earnings Wednesday after close. If we look at a Friday expiration on the 31st, market makers looking at about a $33 move for Friday. That doesn't seem like a lot to me, but I want to check and kind of price it all out. So let's go to Tesla. So average move is around 16%. I've got 9, 10, I'll say 9, 11, 11, 11, 11, 11, 11, 12 and change, 13, 16 is the average. I would say that we could conservatively measure a Tesla earnings report around 10 to 11%. Okay, 10 to 11% seems fair. The stock is trading at 393, so 393.79 times 10%. You're looking at about a $39 move on earnings. Market makers showing about a $33 move on earnings. So I think the 10% is pretty fair. A way that I could trade this inexpensively would be the following. If I did let's see what it charges me if I did a 395 by 392 and I went out, let's say $30. So 395 to 425 and 392 to 62. So I paid $21 for a $33 expected move. So I mean, there is some profit potential in there. Okay, it's an expensive trade. I mean, I'm putting up $2,000 on the trade. That's my max loss. If Tesla has a big earnings report, one way or the other, and it goes beyond the expected move, then I've got a good chunk of profit potential here. If I go another strike, so I go like 22.50 or a 32.50, I get a little bit more profit potential here. If we have look, I'm measuring a move around $39. Okay, so if I can get a measured move of around 32, I mean, I take a decent chunk of premium. Now, I'm risking, and max loss would be if price doesn't go anywhere, then I'm risking $2,000. Like that's a pretty expensive trade. So for me, a more cost-effective way to trade this would be, okay, let's look at we're currently trading on 395. So if I go $30 and I do a 360 by 3, oops, what the heck happened there? If I do a 360 by 357, that's roughly a $35 move. Okay, that cost me 50 cents to make 250. That's a good trade. Okay, I mean, it's not the highest probability, but if we have more than an expected move, that's a very cheap debit for me to make some money. I can risk $50 to make $200. If I go $30 to $35 in the money here, let's go to the 425. If I buy the 425, I mean, I like this trade. I'm going to take this trade right here. It's going to cost me about $1. This is similar to what I did in Netflix last week, I think it was last week on Netflix. If price goes up $30, then I have enough to make $2.50 on the upside, and I would risk my 50 cents on the downside. Okay, if price goes down $30 to $35, and there's some follow through there, what I want to make sure before I take this trade is how many times do we at least get to 10% post earnings? And if I have to take this trade out to next Friday, I would probably take it to next Friday as well. Maybe it costs me a little bit more, but it shouldn't be too bad if I keep the spreads, 250. So let's see what we have for initial reaction. I'm looking to see how many times has price gone at least 10%. So that one checks the box. 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 We get to 12 after day 3. This one gets there after day 3. This one is right there at 9.99%. I mean, it's not there, but it's close. This one gets there. This one does not get there, and this one gets there. I mean, Tesla has a lot of good expected earnings where it goes to the expected earnings. Like if I'm trading a 10% move, it's done it, 8 out of the last 10 times. Like that's pretty good. So I like the trade. Now, I will say this, to be smarter and safer on the trade, I think I'm going to take the trade here. I might do 2 trades on Tesla. And the reason why is it's so little risk on this trade. I mean, I'm risking $100 to make. So if I lose on one side, I'm going to lose about 50 cents. Let me put this in yellow. So I lose about 50 cents. If I take a max loss, I'm losing 50 cents. If I win on one side, it costs me 50 cents. Okay. And I make $2.50. So that nets out to be $2 profit. And I lose 50 cents. So it means I can walk away with about $150 profit. I can lose on one, I can win on the other, and I walk away with $1.50 net profit per contract. That's not a bad trade. So I can make more in reward than risk and play this thing both ways. That makes sense? So I like that trade. Okay, now what I'm going to consider on Tesla is I'll give it enough time for this week and for next week to play earnings and post earnings. So I'm going to try to get into this trade for $1. Okay, let me see if I can get this trade in for $1. So $1.04, $1.05. Hopefully I get filled at $1.05 in the mid price. Come on. $1.06. I'll go a little bit higher than the mid. $1.07. $1.08. All right, just got filled on that trade for $1.08. Okay, now I'm going to do something very similar to that going out to next Friday and try to do the same thing with partial profit. So this one is more similar to Netflix, where I could probably close this trade out for like $2.40, $2.45. If we're way beyond 427 by Friday or way beyond the 360 by Friday, this is an easy trade for almost max profit. Okay, but I'm going to go out to next week, the 7th, and do a similar trade. I still get 250 spreads. Now we're looking at about a $40 move. I'm still going to look to sell or do my debit spreads $30 or $35 out of the money. So we're trading around 395 again. If I go to the 4, okay, so it cost me a little bit more to go out to next week. And that's because the market makers are planning on about a $41 move. So I'm still going to say that it's going to be post earnings. Maybe there's some follow through. Let's go 35. So that would be from 94 to roughly 30. So right there, now it cost me 50 cents. So 50 to 55 cents debit on the call side. And then from 95 down to 60, it cost me a little bit more. Okay, but I can still make more in reward than risk on this trade, and we'll look to see if there's any follow through. Worst case scenario would be that price goes in the middle. So the most I can lose is, what I paid for the trade. Now, this one might be better for me to close out for partial profit. If I get a winner for this Friday and a partial winner for next Friday, I'm just going to take the profit. So I'm going to try to take this trade for hopefully less than $1.20. Let's try to go $1.15 on this trade. $1.15 debit per contract, and then worst case would be up to $1.20. If it's over $1.20, I'm probably not going to take the trade. Let's see if I can get filled for $1.15. $1.15 not filling. Let's try to go up to $1.19. $1.20 final offer. If it doesn't take, I'm not going to take the trade. All right, I got filled at $1.20. All right, so I'm in 2 trades on Tesla. Let's put this in. This is going to be A1 trading. I'm going to post this in for my tab for stocks and options. So new trade. So I'm gonna get all these posted in one spot. So Tesla is going to be a 1/31 expiration and also a 2/7 expiration. So the 1/31 is a buy 425 call. And the sell 427.50 call. Buy the 360 put. And the sell 357.50 put. That one I got in for $1. The 425 by 427.50, the 360. Okay, that one I got in for $1.08. $1.08 debit. And then it'd be a 250 max credit. Okay, 2/7 expiration would be a Tesla trade again. Tesla 2/7, buying the 430 and selling the 432.50. The put side, buying the 360 and selling the 357.50 put. And that one I got in for $1.20 debit, 250 max credit. Okay, give me a second to finalize that post. And then on the stock itself, it's probably easier if I just open up another chart here. Let me go open layout, unnamed. That shall remain nameless. All right, 393. So what I need price to do is get above, and I'll put it just trend line here. I need price to get above 427.50. So price is above 427.50. Oops. Actually, I'll just box it in. That'll be a little bit easier. So 427.50 is right in here. And to the downside, 357.50. There. Change this to yeller. So greater than 427.50 and less than 357.50. Okay, so if price is above it or below it through earnings, then there's easy profit on this trade. If not, price stays in the middle, then that's my risk. All right, so that trade is posted. Okay, in for some Tesla. Next up on earnings, we have, where's my screenshot? Ah, darn it. Let me just copy that screenshot again so I can keep it handy. There it is. Okay, Tesla is Wednesday after close. Let's go to Meta. Meta is sitting at all-time highs. You know, I'm as curious as everyone. Like, is it limited upside? Not necessarily. I mean, we could have like a big blowout move and Meta's just crushing it like they always do typically and have some pretty good earnings. The only time they really had this big downturn was, you know, we had a bear market in 2022. Tech was getting crushed. They also were overspending for, I mean, investors thought they were overspending in the metaverse. And boy, did that come back in a big way. I mean, isn't that nuts? Meta was down to $92 and it's back up to $600. That's insane, man. Anyway, here we are at all-time highs. I still think there is some wiggle room to the downside. I mean, we could kind of top out here and certainly push back down to these moving averages. This also has a crazy high bar count, so I would not be super shocked if, I mean, and it may not necessarily be earnings, but it's like I would still see the technical side of Meta not necessarily going super high without having a nasty pullback. Or we just have like, you know, sideways or starts to work its way lower. Look, one bad earnings report, this thing will find that 200 moving average easy. So anyway, point is, I'm going to look at Meta and price it out. We have a 49.5 IV rank. Earnings is Wednesday after close. Come into my options history here. Let's go into Meta. I actually have both of those. For somebody's asking about the ETFs on China, Brazil, and Argentina. I trade Brazil. I have some shares in already, and Argentina I'm waiting for. I'm waiting for a pullback on. It's what is it? ARGT. I'm waiting for a pullback. I want to see it pull back into like the 144 200 moving average. But EWZ for Brazil, I already have some exposure on that one. We're bouncing up here. That's a commodity play, which is why I have some EWZ. So I do own some shares. And then ARGT, I'm waiting to pull back. China, I've just got stock exposure in China. I've got Alibaba, Baidu, and JD. I traded KWeb. I traded FXI. I'm out of those right now. I'm looking for a little bit more upside, and hopefully we'll get it. All right, let me price out some Meta. I'm going to price out Meta Microsoft for today. So Meta at 663. Market makers saying that by Friday we're going to have about a $47 move. Let's look and see what the earnings shows us. 13.74 average move. We got 15, 20, 20, 19, 19, 15, 13, 13. I think that's pretty safe. I'm going to go conservatively 13.5%. 13.5% times current price 663. Looking at about a $90 move. Wow. Market makers say 47. Earnings history says 90. Okay, well, that gives me something to work with. We're trading at 663. Let's see what it costs me if I go like $50 in the money. Or I guess $50 out of the money. So 47. If we go 662, that'd be down to like 610. So if I go 610, that's dirt cheap. All right, now before I price this one out, how many times did we actually hit 13%? So for me to confidently take this trade, I think 13% is pretty conservative. So how many times do we actually hit 13% post earnings? This might be the deal breaker. So post earnings, I like to go up to 8 days. I need 13%. Didn't get there, didn't get there, didn't get there, didn't get there, didn't. Very typical of earnings, 5 out of 10, 5 out of 10. So Meta seems more like a coin flip. So I think what I'll end up doing is, if anything, I might just not take the trade, or market makers say 47. Let's see if we have. Let's just do the exact number. 662 and 40 would put me around 620. So I'm going to do a 622. Okay, this is probably going to be like a 1-to-1 trade. If I do a 622.50 by 620 bear put spread, and then I do another 40, like $40 here, then I go to 700. I'll buy the 700 and sell the 702. So for $1.27, it's about a 1-to-1 trade. So if we do have a more than expected earnings by Friday, that I could see, a lot of money get thrown at it. This is after the Fed as well. It's cheap. I'll throw it out there. I mean, it's $1. Let me see if I can get in for like $1.25. So that would be, I can lose one side, win one side, still walk away with $1.25 per contract. I might have to, if it's over $1.30, I'm probably not going to take this trade. All right, let me let that hang out for the day and see if that actually fills in the next 10, 15 minutes. By the way, I have a hard stop at the top of the hour. I've got another webinar at 11 o'clock. But I'm going to look at Meta. If it gets filled, I'll post this trade. If it doesn't get filled, then I'm just going to wait. So I've got it mechanically right now sitting around $40 above current price and $40 below current price. So it's not a bad trade. I just don't want to pay too much more than $1.30 for it. Let's see. I would think there's more potential risk to the downside if there's a miss in earnings, but Meta's just been killing it lately. Plus in the AI stuff, I mean, they're probably positioned for AI gains as well. But anyway, I'll see if I get filled. Okay, that's Meta. Let me price out Microsoft. So Meta, let me see if I can get. I'll try 131. I'll try to penny my way up there. 131, 132. I guess I'm willing to take up to like 135. 133. All right, got filled for $1.33. I'll take that trade. So Meta's coming in hot. So this is another new trade. Meta, 131 expiration. And this is a buy 700 call and then sell the 702.50 call. Buy the 622.50 put. Sell the 600 put, or 620. $1.33 debit and $2.50 max credit. And then for the image here, Meta, I need price to be above 702. So I'll box this in. So for above 702, there's profit potential there. For below 620, profit potential there. So either greater than or less than 620. Okay, so save that. And it's posted in Pulver Alerts. There it is. And last one for today for me, Microsoft has been all over the place. So this one to me doesn't look like a stock that's going to necessarily be gangbusters higher or lower. Doesn't mean that it can't be, but man, something tells me that my favorite trade would be just to sell like a big fat iron condor on this thing. I don't know if that's the play though. You're going to collect way less premium. The out of the money debit spreads are just really, really simple because it's cost effective and you can lose on one side, win on the other side, and essentially it's a 1-to-1. I like it obviously when you can get a little bit more reward than risk. But Microsoft, let me just see what the numbers are. Okay, so Microsoft, we're expecting by Friday about a never mind. Premium is going to be, I mean, for only like an $18 move and we're getting 250 strike differences, I don't think there's enough precision in this trade to take it. If I go into the expected moves as well, let's go MSFT. So we're looking at about a 3% move. I mean, crying out loud. It's been consistent, but I mean, 3.71, that's just nothing. So 0.0371 times 440 price. Looking at about a $16 move. Market makers show about a $17 move. I mean, in a way, it's like, okay, well, could we sell premium? Is there any way I could sell like a 470 or a 386? Probably not, but I'm going to look at it. So Microsoft, coming to the options chain, earnings on Thursday. I doubt the premium is going to be anything the way I want it to be. If I looked at like a 470, that'd be a call fly. So butterfly, long call fly. And what's that high price? High price around 470. Very doubtful I'm going to get the positioning that I want. So 470, if I pin it there, yuck. It's like, is it possible? I mean, I can pin it there. That's way outside the expected move. We'd have to have a huge move to the upside to hit all-time highs. 470 would be my pin price. Like, I don't mind taking on this trade. I mean, I could still get this is the good side, right? Probability of this trade is 90%, which is not bad. So I got a 90% chance of profit. I'm only making 25 cents a contract, which is not awesome. But I do have a profit trap where it would be a trade that looks like this. So I can pull in 25 cents. I can max this thing out around $2.50. So that gives me $2.70 max profit on a trap. And then my risk would be if we're beyond 477 or so, then there's risk in the trade. And there's about a 7% chance of going to that move right now based on current price. Anything is possible. It's not an awful trade. I'm gonna take it. It's cheap enough that if I win on the trade, I still make $25. But it's a profit trap potential, so I'm gonna take this trade. So 25-cent credit on the trade for a broken wing. Max risk is about 475, but the buying power is next to nothing. So I'll take the trade. Hopefully I can get filled at, let me see if I get filled at 30 cents. 30 cents. Not filling. Let's go down to let's try 28. I'm going slightly above the mid price. I'd be okay with 25 cents. It's obviously not that exciting. 25 cents not filling. Come on, bro. 24 below the mid price. 23. Okay, final offer 22. Naturally, it feels all right. I got filled at 23 cents. Definitely different trade. MSFT, new trade. MSFT, 131 expiration. It's a broken wing butterfly, so I'm doing a buy one call at 477. Oops, I'll do the other side. So 467.50. Sell two call at 470. And buy one call at 477.50. So it collected 23 cents credit. This one has a high probability of profit, a profit trap potential. So it's definitely not like an income trade. It's more like if we hit the all-time highs and I can trap that thing, I want the credit up front, so I'm not paying for the butterfly spread. And if I get a profit trap, it's basically offering like a 1-to-1 total trade if I can trap it. So we have profit trap potential at MSFT all-time highs. If price is sideways, down, nowhere, we keep the 23 cents credit per contract. Okay, so I need price to basically stay below this area. So profit below and trap at 470. That's my trade on Microsoft. Take a screenshot and I will wrap it up here in just a couple of minutes. So I'm going to get rid of that stuff on the bottom. Those are from previous trades. I've got those alerts already posted. Okay, and Microsoft can go into the mix. All right, so posting some earnings stuff for Pulver alerts. Posted. All right, Tesla, Microsoft, Meta trades are in. Anything else for earnings for the week? So I have now some trades running. I will highlight. Oops, wrong highlight. Let's try that again. Highlighter. There we go. Earnings on those three. IBM, I do want to take a look at this one. IBM has had a pretty good run lately. You know, maybe a popped upside, all-time highs. Let's see what this does earnings-wise. IBM, probably not a big one, but let's find out. 9%, not bad. So 8, 6, 5 and change, 4, 3, 4, 6, 8, 8. Average is 9.25. I would say it's less. The last 10 earnings report, we're probably getting like 5 or 6 on average. It's a $225 stock. So I'm just going to say 5%. 5% is conservative. So about $11 move, that's probably a no-go. IBM shows market makers expecting a $14 move. I'm calculating about an $11 move. We're 250 apart in the spreads. That's just trashy. I could do maybe something similar in IBM around the same highs, around 240. And that's right around that. I mean, I'm calculating what I say I'm calculating. So the market makers show about $15. I'm showing $11. If I take, let me take the average here that it actually shows. The average shows 9.25. So 9.25 times current price puts me up around 20 bucks, almost $21. Well, that puts me up to 245. Oops, and we have all-time highs. All-time highs at 240. Maybe a broken wing to the downside would be better. Maybe the 200 area. Let me see if I can get a broken wing butterfly put slide. So I'll do a long put fly and I'll pin this thing around 200 bucks. So let me see if that will offer up any premium. Let's move this up on the chain, pin this thing at 200. 3 cents credit. Obviously that's not exciting. 9 cents credit. That's worse. 205, maybe a little bit more premium. 15 cents credit. Yuck and yuck. 34 cents credit. Okay. This trade, I don't mind this trade. Same thing as Microsoft, you know, probably able to profit around 89%, pin price around 205. We'd have to move 20 bucks. Oh man, it's right on that expected move. Son of a gun. Well, here's what I will try to do. I don't mind this trade, but I don't really love it at 33 cents credit, especially when I think this thing could get pinned at 200. So what I'm going to do is try to put this trade in, and I'm going to try to get this trade filled. I'm looking at 750 wide. I'm going to try to get filled for $1. I'll try to get filled for 75 cents. Now this one might have to go like after earnings. Maybe. So what I'd have to see on this one is price would have to drop on earnings, get close to my trade, then I can take the trade for 75 cents credit, give myself a pin price. And this will be a little bit more tricky because I'm going to put this one in good till canceled. And if it doesn't get filled, it doesn't get filled, and this trade will just wash on Friday anyway with no fill. But if price falls on earnings, I'm going to try to trap this beast around a $24, $25 move and kind of pin this thing right around that 200 moving average. And that moving average is 205. And I'm going to try to pin it just a smidge lower at 200. So give myself a little bit of wiggle room there. Okay, so I'll put this one in pending at 75 cents. If IBM has positive earnings, this one just doesn't fill and there's no trade. Right, so I'm going to put this one in pending for 75 cents, and I'll just hang out. So I'll get this one posted, and then I do have to run like right after this post. So this will be IBM, new trade, IBM, 131 expiration, buy, one call at 190 or 202. I'm sorry, these are puts, duh. 202.50 put, and then sell to put at 200. And buy one put at 192.50. Looking for 75 cents credit or higher. Pending order. This trade can fill if IBM price falls towards the daily 200 EMA around 205. This is a pin price at 200, which is just beyond the expected earnings move. If IBM goes sideways or up, this trade will not fill and will auto cancel by Friday. Okay. There we go. And then one picture on all IBM. Just put a box in here looking at that 200. So I'm looking at a pin price right in there. So we're going broken wing butterfly, $200 pin price. But it hasn't filled yet. So I'm just going to let that one marinate. Okay. All right. I can go in the screenshot and posted. So in the stocks options trades, IBM posted, MSFT posted, Meta posted, and Tesla posted. Get yourself some pulver alerts. All right, everybody. I'm going to wrap it up there. NVIDIA, yeah, what about it? It got its butt kicked yesterday. I think it's an overreaction, so I'm still in it. What I did on NVIDIA was I did take some profit on so I had a collar trade on here. I did take some profit. I'm still sitting with a ratio spread. I think NVIDIA has all the potential in the world to find support and then come back. I don't think it's a terrible trade to go and consider like, okay, even a debit spread to the upside right now for the next 30 to 60 days is probably okay. You know, I mean, it's just an income trade. If it goes lower, goes lower. Let's see if by the end of March, let's see what NVIDIA can do. NVIDIA, we have earnings on NVIDIA, I think in March, end of February. Okay. Most likely their earnings is going to be pretty solid. So if I went post earnings, I think we can fill this gap. So let me look at something post earnings. We can go out to like the 28th of February. So I'll go post earnings and see like current price is 120. If I do like a 121, I pay 45 cents to make 55 cents. I mean, that's a bad trade. I'll take that trade there for, risk 100 to make 100. If I want to go one strike higher or try to give myself a little bit more profit potential, I risk 95 to make $1.05. I'm sorry, I risk 90 cents. Hang on a second. Yeah, I was going to say risk 95 to make $1.05. If I go a little bit more favorable, I risk $1.30 to make $1.60. Like I'm just getting a slight move to the upside if I get that trade. Now, obviously this is like kind of calling the bottom here, but it's a debit spread. So anyway, if I like to trade NVIDIA, I'll post it. I got to go. I got a webinar right now, so I do have to jump. But look, if you're in the poll alerts, look for it to get posted. I don't mind the trade. I think we can have a gap fill in the next, post earnings or even through like March, April. I'll take a couple stabs in NVIDIA. So look for that to get posted soon, but I'm going to bounce. All right. Thanks, team. I'll see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.